Boom! We are live.
Boom!
Facebook, do you guys like that? We're trying new things.
Facebook, if you don't like that, you better start.
That's it. All right, we are now live on TikTok and Instagram. So Jimmy, when you get a chance, just definitely go on Instagram and tag yourself. Well, I already tagged you on the top part, but I need you to just go on and check it.
All right, so now I'm in the. It says I joined. What do I do? Just leave it like that?
What'd you say? Yep. No, that's join. You have to request.
Oh, request to join. There we go. Send request. There we go.
All right, Jimmy. Now we are live together on Instagram. We have people coming on Facebook. I'm still not seeing the comments on Facebook. I do apologize.
Let me turn the volume down so it doesn't echo.
Let me turn mine down too. All right, is that better?
Yeah. Yeah, no, I still hear the how can I turn off my sound on the live?
I think you just have to lower your volume all the way
Look
down.
at this, millennials. We don't even know how to work technology. What are we doing helping people buy and sell houses?
I don't know. We're doing a good job on that one.
Yeah, I'm just going to leave it there. I mean, you know, whatever happens, happens. There we go. Okay. So we're sticking with our topic tonight. Stocks
Yes.
or
Guys,
real estate?
someone just definitely liked it on Facebook. We want to tell you thank you. Thank you for liking it.
What is the better investment, stocks or real estate?
This is a good topic, I think, personally. Because especially nowadays, everyone's wondering like which one is better. And they're just wondering like what's going on. So
listen, did you watch the GameStop court case?
No, I didn't watch it yet. Tell me what happened.
Well, basically, it's just a continuation of the BS you saw and how Robinhood's trying to defend themselves. But the way I kind of see it is right now with Robinhood and access to easy trade, like you can trade easier than ever before. Information's available everywhere, and there's apps that make this stuff extremely easy.
Mm-hmm.
I start looking at stocks and I say, all right, well, there's some plays that you could do 10, 20, 30% in a day. You could do it in a week. You could do it in a month, right? And I've yet to find a piece of real estate that's giving me 10%, 20% back in a day, right?
Yes.
The level of entry to get into stocks could be as low as a couple $100.
That is true.
Compared to real estate where it's usually 5 digits to get into.
So you're saying that it's good for the fact of the entry point. That's what you're pretty much getting.
I think it's a much easier entry point for people to begin investing in. Like me personally, my game plan has been put some in the market, leave it there, let it gain its interest over time because look at that. My cousin just messaged me. He says, our mics are echoing. How do I turn it off on Instagram?
We need help, guys. If you're watching this, YouTube, Facebook, TikTok, Instagram, like we're trying.
Let me see. Maybe if I lower this mic.
And you guys, yes. Someone definitely mentioned on TikTok that they think the best part is diversifying your portfolio, which of course that's always a really good advice. All right.
Are we still getting echo?
Yeah, I think it's still coming from YouTube. I think what we're gonna have to do is maybe go live separately or something like that. Still recording it. I think it's not working like this.
Yeah, I think it's, you know what it is? It's the Instagram feed playing it back.
And it's doing it at a slower pace, so it's slowly here. All right, guys. So I'm gonna cancel Jimmy. I'm gonna kick you
Move
out.
over to YouTube. Move over to YouTube, everybody. There we go.
All right, guys. Give me 1 second. I'm still here. I'm just going to be typing this. I didn't realize how much work goes into trying to do like a live with other people.
Yeah, especially when you're trying to do it across multiple different platforms. And it's just a pain in the you know what.
Boom. All right. I got it. We're back on. All right, let's get back to our topic.
Back to our topic, investing.
You guys are now tuning in. Thank you. Thank you for that, dealing with those craziness. But we are getting back into it. We're talking about stocks versus real estate. A lot of people on TikTok definitely said that they want to diversify their portfolio. And as Jimmy pointed out, he does like stocks due to the fact that it's an easier entry point. So it means it's cheaper to get into it versus waiting till you have a lot more money to get into stocks.
Yeah, now don't get me wrong. I feel that stocks are a lot more volatile for the most part when you compare them to traditional real estate, right? You're usually, I mean, I can count on one hand how many times the market has collapsed, the housing market, whereas stocks, okay, maybe not thousands of times, but when they fall, boy, do they fall, right? Like you could stay in your
Even now,
house.
today was a down day. I don't know if you checked your portfolio, but I know mine was a little down.
Yes, sir. My portfolio was nice. It was very up today.
Okay, it's good. So
yeah. So whatever I had yesterday that destroyed I went negative 3.24% yesterday.
Okay.
And then today, so the company, like, all right. So my overall take was yesterday overall just seemed to be a very down day. I'm invested in about 64 companies and all
64?
Yes, sir. So whoever said diversify your portfolio, baby, that's what we're doing here. We definitely diversify.
Wow,
so I'm scattered in, I'm scattered. Yeah. And so for me, yesterday, having 57 or 58 companies down out of 62, 64 companies, that was just telling me, all right, overall as the sector, we're down. So I'm like, okay, what's on sale today? What can I go scoop up at a lower price? Because for me, if everything's down, theoretically, right, eventually it'll turn around and stabilize. Yesterday, we had jobless claims that came out way above what anybody anticipated. I still think that was a BS reason for such a sell-off. But so all of those ones I had yesterday, the greater majority of them today went up, with a few of them going down. But again, it's so diversified. Yeah.
Okay, because someone said they can't hear on Facebook. So it is, at least we know that we could definitely see the comments. Did you see it pop up?
Yeah. Now I see it. Yep. So we did that right this time. There we go.
All right.
Can they hear you now?
I do not know. I didn't see a response yet. So hopefully
I hear you.
All right.
You know, whatever happens, happens. There we go. Okay. So
but yes, that is dangerous.
Can I hear you now? Are you playing it from somewhere? I hear you.
Might be.
You know, whatever happens, happens.
I think I was.
Hey guys, welcome to the Twilight Zone, round 3. Let's go.
Everything's going crazy today. I think
everything.
We were more prepared this time, but more issues came up.
Yeah. Definitely. Yeah. Look, man, it's tech. I went to do a video shoot for somebody 2 nights ago. I've never once had an issue with memory cards. Never once have my memory cards failed. And every time I would hit record, now I'm from England. Every time I would hit record and then stop it because the scene was done, what would end up happening is it would just sit there and say processing. And I have 2 kids screaming in the background because they want to eat dinner, right? Wrap this up. And it's just stalling on me. So tech, it's great when it works. When it doesn't work, you just got to bear with us and we'll get it ready. So now we're good, right? They can hear you on Facebook?
I believe so. I didn't see any other complaints.
All right, good. So yeah, stocks. Very diversified over here.
That's dangerous. In my personal opinion, I think that's way too many. You have too many to actually see growth in when something goes up. I feel like you're overstretching yourself. Like me, I only have my main portfolio. I have about 10 companies, maybe 11. And I see things that I want to buy, but I just refuse to. I stick to my rules. Not until I have 10 of everything in my main companies, then I'll probably look at one or two. Like I bought an ETF the other day, and it's only because it had like 5 or 6 companies that I've been wanting to get into, but
Yeah.
the ETF had it. So I was like, you know what, that's a safe move because these are companies I wanted to buy. And if you
Yeah.
guys don't know what ETFs stand for, Jimmy, you want to take it?
Electronically traded fund. What if I didn't know that? What if I didn't know?
Knew you did. That's why we're doing this. I already knew you understood what that was because we already talked about stocks in our own.
I have a few. I have MJ. I have MJ is one of my newest ETFs. And then
what's MJ about? Tell me about it.
Think about it. Good old Mary Jane.
You know, I was actually looking for a good cannabis.
Well, listen, it was 25. It had a nice pop into the 30s, and then it came crashing right back down. So it's back down to 25. You know what happened? It ran up with the Tilray because Tilray's part of it, and Tilray was at 35, spiked to 70, dropped right back to 35. You had Sundial rally. I mean, there was one day where every single if you sold marijuana or you were somehow in the marijuana business, right? Minus the drug dealers because they didn't get a piece of this action, but every single stock spiked for them. But then they all crashed.
The good thing about stocks, though, you can trade weed legally. Like that's what you're doing. You're trading weed. I'm selling weed. I'm selling my stocks.
How'd you get rich? I bought a lot of weed. I
didn't get to smoke it, but
but you know, you brought up an interesting point, and what I like a lot about this, let's call it a game, right?
Well, this whole thing is a game. Money itself is a game.
Yeah, life's a game. 100%. That's it. You're not making it out alive, right? So might as well enjoy the time while you're here. Mm-hmm. What I like is that me and you can both have two completely different trading styles. The same way with investors in real estate, you have long-term holders, you have flippers, you have guys that are only looking for commercial space. There's so many different avenues you could play. What's given me a lot of success is I'll buy into a company I like. I might buy only 5 shares, but I'll set it up that once it hits 1%, right, it'll automatically trigger a sale. So
what is that called? What is that called for the people who don't know about stocks like that? Let's give them a little information about real estate.
I know when it goes down, it's called. I know when it goes down, it's called the stop loss. That I know. So I don't know what they call it when it goes up.
Capital gains.
Uncle Sam.
So what Jimmy's talking about right now is he's talking about he puts in a pre-sale buy. So he's pre-selling the company before it hits his goal, before it hits it. So
that way I don't have to keep track. That way I could play 62 companies and not have to think about. All I do is I'll sit there at work sometimes and I hear ding, ding, ding. This one bought, that one sold. This one bought, that one sold. I'm like, all right. And I did the math. If you take $1,000 every single day, you start on January 1st. There was about 252 trading days this year. If you took $1,000 and you made 1% on it, right? So the first day you play, you invest 1,000, you walk away with 1,010, 1%. It's not that hard to find 1% winners for the day. In fact, if you could do 5% every single day, well, then you'll be hired by a hedge fund company because that's very
100% true. If you can guarantee someone 5% of their money, they'll love you. And
right.
You know the crazy part is if you do the same thing, tell people in real estate, hey, I give you 5% of your money, they look at you like you're crazy.
Yeah, exactly.
That's not enough money for me. What?
Exactly.
5%.
Well, the bank gives you
that.
The bank gives you 0.00000005.
I actually Googled yesterday. I was Googling high yield savings account. The highest one I found
0.85. Was it
0.50 actually?
I looked up a few weeks ago. There was one pre-COVID that was giving it was 1.4%, and I didn't do it.
Wow.
I didn't do it because they didn't have, there was no local branches. So I'm like, I'm going to put all my money in this bank and not be able to take it out anywhere. Meanwhile, I never use an ATM.
It was an online bank?
Yeah. Yeah, but you know what? That goes to show you that there's definitely ways and places to put your money where you don't have to worry about it.
And what I like about it, it's not a CD. I'm not a fan of CDs unless you have like a shit ton of money and you just like put it in there, you're not going to touch it. Because most people,
you know what, man, you're better off taking all your money and sticking it into a secure company like Apple. You're making dividends, and on top, Apple is 100. Number one, it's not going anywhere. Now they're talking about investing in cars. So I looked at it, and Apple, when I bought Apple back in August, it was 128 a share. It's more or less 128 right now. It went 128 down to
141. I was so annoyed. It went up to 141. I bought more of it, and it came right back down to one. Right now, I think it's trading.
It doesn't move a lot. That one, I don't like it.
And it's what kills me about stocks and stuff like that, especially lately. I don't know if it's because all these Robinhood traders, as they call them, but the company's financials are secure as can be. They made $1 billion, like $1 billion on the books, and the company went down. Like it's
when they released their earnings, right? When they released their earnings, it was the
$1 billion
first time ever Apple
ever,
and their stock goes down.
It doesn't. It's like logic is not making sense in this day and age, and that's why I
follow the sheep. Follow the sheep and the hordes, but get out before the sheep and the like. Sometimes I'll look at it.
I don't swing trade anymore. Like I did option trading. I wasn't too.
I won't touch that.
Yeah, I wasn't too good at option trading. I'm in love with futures. I'm in love with futures. I haven't mastered it though. I have not mastered it. I don't think I'm good at it yet. I'm all right. Like some days is better than others, but I'm in love with futures. But with real estate, I don't feel like you have this. Like I'm not talking about like being a loan officer or a realtor because that's hell of a stress. Like today, I had a super stressful day dealing with files.
I get it.
Yeah, it's like every time you think you're good to go, and they be like, one more thing. You watch Jackie Chan?
Yeah.
You remember grandpa or his uncle? One more thing, Jackie. That's how I be feeling like one more every single time. But what I realized is that if you stick with real estate, 9 times out of 10, it makes you a lot of money. That's my personal opinion.
Yeah, you gotta take control in the business. You have to have control. If you don't have control of your clients, then you might make a lot of money, but your life is gonna be miserable. You know what I mean? And I've gotten caught in that many times where it's, yeah, I'll take a call at 9:30. Yeah, I'll give up my only day off after 3 weeks that I was supposed to. Yeah, all right, I don't need the day off. Let's go look at more houses, right? But in the end, you're just going to burn yourself out. You know what I mean? I listen to these people. They're like, oh, yeah, you can hustle. Yeah, I've done that before. I've worked 7 days a week. Every single week, I'd work in one restaurant, clock out at 4:30, walk right next door, no bullshit in Yonkers, straight to the next door restaurant, clock back in, do 7 days a week, 12-hour shifts, and then go out all night and not have a problem because it was all physical work, right? Mental while I'm there, yes, engaging, interacting with the customers and blah, blah, blah. But when you punched out, you were done. Nobody's going to call me and be like, hey, by the way, you forgot my barbecue sauce today. Whereas now in real estate, like people can reach me at any moment in time. I could be at home at 11. Oh, hey, by the way, I forgot. Can you do this? Blah, blah, blah. We need it done by the morning.
Can you run comps for me on this house that I want to buy?
Right.
We setting up the showing.
Honestly, man, it's gotten to the point where if the home's in highest and best situation, I'm like, dude, I'll run the comps, but they really don't matter. The house is going above asking. So what does it matter if the comps say, it should be less?
That's 100% true, especially now. Everything's going so high.
And that's one thing about real estate where like, imagine if this is how I look at the real estate market, especially numbers, when you're trying to get a picture of the financial outlook of the market. Imagine having to buy a stock today, but you're not necessarily, you're more so buying it at the price that it was 2 months ago, not what it is today. And that's how I look at real estate statistics and numbers. These comps are old. These are 30 to 60 days old. Our market is moving very fast right now to look at 180 days ago.
100%. Somebody said, what's going on with you guys? Nothing. We're just talking about stocks, real estate, and trying to see which one do you guys think are better.
If I gave you $1 million today, would you buy real estate or would you put it in stocks? You can only buy one thing, real estate or stocks. You have to spend all $1 million. Where's it going?
That's what I would have thought. Real estate. I'm buying a nice apartment building. I'm going to get
Where are you buying an apartment building for $1 million for? Please let me know. I'll go with you.
Pennsylvania, upstate.
Let's go.
And have them for $1 million. I
was going to say, definitely not boroughs. Definitely, you can't even get a 2-family for $1 million.
Not in New York. You're pushing it.
Let me ask you a question. If you were to put $1 million, because clearly this is possibly something you've thought about. If you bought $1 million apartment building in upstate Pennsylvania, what is your ROI year over year percentage ballpark?
If I want to be safe, if I'm doing like $1 million, right, I'll do a safe. I'll probably get 7-8%. That's on a safe.
Okay,
We're talking about an A to B class. If I go like a B to C, we're talking about 10 to 15%. And so
that's much better than, I mean, that's a lot more doable than stocks and a lot less
and
volatile.
it's safer. That's what I'm talking about. I'm getting my money every month. I'm not waiting 3 months.
You're supposed to. You're supposed to.
You like 80% of it. That's still good instead of waiting 3 months for it. But realistically, if we had $1 million and I'm putting it on, I wouldn't all put it into one project. I would definitely split it. I put 80% into real estate, 80%, maybe 75 if I want to be generous. 75 in real estate. I take 20% and put that into some stocks. I'm talking about like Apple. I love Apple. I'm a big Apple, Microsoft. Those are like my top two companies right there without thinking.
Brother, you got to start playing the little guys, the $10 to $20 companies, the ones.
I don't really do those. And then
what does Jordy Belfort say? It's got imminent patent approval, expecting a launch. And what does everybody on Reddit say? To the moon, right? But if you think about it, you're getting in at rock bottom prices, right? Like I'll give you one example. I bought $100 of a 13-cent company. I think it got me about 715 shares. 13 cents was the company. And I said, you know what? They make tonneau covers, those flatbed covers for pickup trucks.
Mm-hmm.
But they're EV. They're going to be able to charge the pickup truck while it just sits in the sun, which is awesome for contractors who are always on the go all day long. So I said 13 cents. It's $100 I'm going to put in. The worst case scenario, I lose $100, right? Best case scenario, some big car company picks up this stock and it goes to $10, right? That hasn't happened, but in one day, it went from 18 cents to 85 cents on no new news. There was nothing really talked about. They didn't do anything. So I said to myself, I'm up about 150% on my money. What do I do? Stay? Do I go? Right? 13 cents to 85 cents. Right before it popped, I think it was at about 17 or 18. So whatever the math was, it was 150% up for the day. I'm like, this is clear. This is going to do one of whoop. And then guys are going to buy it up here. And then what's going to happen? Everybody else is going to dump it. And sure enough, it went to 85. And I'm like, all right, let's see. And then it started going down into the 70s. I'm like, that's it. I'm out. I'll take my 120%. So there are little companies where you might be able to get a really fast return, but it's not something I would say take all your money and put in. Definitely not.
Yeah. See, that's what I feel like. That's what people who have time to play and watch it. Me, I like good companies that I don't have to worry about. Like I don't check my stocks every day. I go like weeks without checking it. Sometimes even a whole month without. I just don't.
Nah, hell no. Hell no.
I know my companies are good. I know the.
Yeah, I think one was good too. It went from 130. One I had went from 130 a share to 39 in less than 2 hours.
I don't have to worry about that. I know my companies are good. Like,
but this company's a good company. There was a BS short seller report on it. And it just because it happened to be Chinese, they freaked out even more and were like, oh my God, the world's ending. But guess what? The following days, as soon as that company opened up, I said, yo, this is $39. This is the deal today. This is Black Friday money. This is Black Friday money. It went from 39 right back up to 75 like that. Less than 1 day. That's 100% return. So those are the plays where I'm like, $1 million on this, much better than $1 million on real estate. Because shit, after today, I'm buying 2 of those buildings. You know what I mean? I would never put $1 million on it. I would never do that.
Yeah, of course not.
I bought 5 shares, even though I'm like, yeah, this is definitely going to 70. I'm like, all right, let's do 5. Right?
You're a modest millionaire.
I don't go ham on anything. On anything. I keep my portfolio really light. I've had a few companies where I held too many of them. And when the market dynamics were shifting, I hated having all that money tied up in one company, especially when I can buy something for $10. Set it, dude, no BS. Let me ask you a question. How hard is it for a stock to go from $10 to $12?
$2 is not bad.
Pretty simple, right? Any sign of good news will definitely get it up to $2. Good earnings, right? So I'll buy 10 shares at $10. Now, 10% of $10 is $1, right? So I'll set one to sell at $1. I mean, at $11. So I bought 5 at 10. I'm setting one to sell at 11, and then I'm going to sell one for every quarter it goes up. So it goes up 25 cents, then it goes 11. It's a pain in the ass to set these trades up, but it'll go 11, 11.25, 11.50, 11.75. It'll hit that 12. I got one left, and then usually it comes back down, and that one lets me remember that, hey, I owned this. I already made almost 15% on average back. Let's go back in again, right? So that's how I do it to not
remind yourself.
Yeah.
Trade. Let me.
You know, when somebody tells me, yo, that stock is overbought, don't buy it. I'm like, yeah, I'm going to buy one. Let it go down $20. I don't care. If I don't buy it, I'm not going to remember it. So I'll go negative $20 and then I'll catch the turnaround, because stocks only go up, right?
That's what they said about Toys R Us. Radio Shack.
That's what they said. GameStop, BlackBerry, Nokia, AMC, take a broke company, jump it through the roof.
Throw money in it. Don't worry. Just keep throwing money. Pump it. It'll go up eventually.
Yeah, no. So yeah, that would be, I think, so for me, short term right now, from now until we really get an understanding of the market, especially here in New York with the prices being what they are, I wouldn't touch investments in New York right now. Not in the suburbs.
Because it's overpriced.
You know, it's hard to say something's overpriced when there's such a market and such a demand for it, but it's just, the question is how long will that demand stay? Now, they said we have the lowest supply of homes since 1999. But
that's good news for me. I got 2 houses I'm flipping. I'm happy. 2. I'm so excited right now, and I finally got my contract.
Yeah, but did you pay a premium for those 2, or you got them at a really good deal?
No, I got them not as good as I wanted to. One I'm still negotiating with, so I'm not going to speak on that yet until the bank clears it, and then we guarantee. But the other one, it's not as low as I wanted to, but it's enough where it's like we'll still make, and the seller was comfortable. It was more like a middle ground, if that makes sense. It was like everyone.
Yeah, no.
And then I feel much better knowing that my contractor's estimate came back where I thought it was, and it's like it reminds you, like, you know what you're doing. You know when you make a contractor bid and you're like, I think this is going to cost it. And your contractor comes back around where you wanted to, and you're like, I still got it. So that was really good. That happened today actually. So that was good.
Good.
Like I said, I love real estate. You know what I need help with though? I'm trying to find 3 new ETFs, because there's 3 different sectors maybe 4 that I really want to get into. I still haven't gotten into the space sector yet. So that's
HOL. Oh no, that's a SPAC. Never mind. I don't know of any space ETFs, but if you do want to get into a company that's still relatively good priced and does have some upside potential, you can get into HOL. And then there's always Virgin Galactic.
Everyone's been telling me about that one.
You know what it is now with so many people talking about these companies, to me, it's like, all right, if everywhere I go, I hear about, let's say, Virgin Galactic, it's pretty safe to say that it'll go up 1%, at least 1.
Will you sell at that point? Because remember, I'm a long term. I don't sell my stock.
Yeah, bro. I did the math. I've 252 trading days, $1,000 invested every single day at 1% return. By the end of 2 years, you'll have made $3 million, 1% a day. So you tell me if you would sell. Dude, I have stocks right now that I've left long-term. One of them is almost up 100%. And we're not talking about a penny stock. We're talking about a stock that I own at $25. And it's gone up to 64 was its highest yesterday. Today,
so how are you on average hitting your 1% goal?
How high am I on hitting it?
Yeah, no, like have you been hitting it like over the term?
Oh, hell yeah. I track every single day. Every single day I track. But here's the thing is I can buy something last week and have set it to sell at 1%. And maybe all week long last week, it did nothing. And then randomly I'll hear that little notification bell and I'll look and I'll say, oh, what left either who left the portfolio today or who's joining us? And usually it's things selling, because I have a rule. I'll buy into a company. If it goes down 10%, I'm doubling down. And then that double down, even that one, bro, sometimes you'll look at, on the right side, how it shows all the numbers like $5, $6, $7, $8. It looks like somebody shot a bunch of arrows at it because it just looks like ladder rungs going all the way down. Literally just tiny little increments. And my 1% I can hit no problem. But here's what I found is a lot of times, if I can guarantee 1%, usually it's going to go 2, 3, 4%. So then I started asking myself, should I get out? Should I leave it? So I told myself, if I really believe in the company and it's something I understand and it's something I think can definitely do good in the future, leave it alone. If it's something I really could care less about, then hey, great. But had I followed that 1% strategy, yesterday my portfolio wouldn't have been negative $1,000 at the end of the day. Because what happens is when you have those big red days, when you have heavy portfolios, I don't care if you have 1,000 companies. On a down day, more companies will be down than they are up. And sure enough, that got me yesterday.
Well, overall for the year, you're still up on your
Overall for the year, we started at 20. I entered the year 26,620. As of right now, I'm at 30,000, like 100 today or something like that. That's including one day where I got so pissed because of what happened with GameStop. I dumped everything. I sold Marcelle. I sold everything for a $1,200 loss because I got so pissed. And then the next day, everything went right back up again. So then I had to buy everything back at an even higher price, and I lost twice in essence. And I was so angry, but I realized I can't get emotional. And yesterday, even though everything was going down, I'm like, scoop and score, baby. Scoop and score. If you ever played football, you know, scoop and score. Oh, it's down. I got you, baby. Let's get you up again. Right. But again, it's only on companies that I think will definitely do something. Like I wasn't part of the GameStop thing. That I wasn't part of. AMC I jumped into for fun. Turned around $300-400 in a day on that one. And then Express, the clothing line, that was another one they were hitting. And same thing, like $200-300. But not like some of these stories, man, where you're hearing, oh, I refinanced my house to play stocks. I took advances on my credit cards. I'm using my rent, my student loans. Like, nah, man. At that point, stop. That's gambling.
That's what I feel like people have to understand. Like, these are risky investments. Like, I don't feel like there's anything that's a guaranteed. It's like 80%, 90% of the time, I think you'll make money on this. Like the overall, like I like one of my favorite companies is VOO. It's an ETF because it's the whole market. So I don't care if it goes up or down. Overall, the market's going up lately. Even when it goes down a little bit, if you look at the charts, they're freaking going up, and it's safe. So even on something like that, I still want to refinance your house because at the end of the day, you don't know.
Yeah.
So this is not investment advice, guys. We're not no experts.
Yeah. By the way, we have to say that this isn't.
You have to say that at least.
I will tell you, bro. I play like the cheapest person. I'm very cheap in the stock market. Like I'm always looking to make money, and if I can turn around a 2-3% profit, and I'm iffy, I'm taking it. But here's the thing: I don't look at money. I don't look at how much money. I don't care about the money. I care about the percentage. Because there's times where I'll have a stock that, let's say it was $1 and it went up 20%. Well, then that just means it went to $1.20 and I'm only making $1 profit on 5 shares.
So you won't even take it.
I used to not, but now a lot of times when I'm like, even though it's a $5 profit, overall it's a 20% profit on my investment. So
look at the numbers.
Yeah, I don't care about the actual dollars anymore. I care more about the percentage. And if I can, dude, like I said, I will walk away with 1% at times, just to be like,
you'll sleep at night
like a baby. I'll sleep better at night than if I have a huge hand opened in a company. One time I did that, and I couldn't do anything else. I couldn't get away from my computer. I'd randomly wake up in the middle of the night, like 3, 4 in the morning, jump on my phone. Is the market open yet? What's going on? Right? Like, dude, it was like a crack. That's what it was. It was crack. It was just, what's the market doing?
That's what happens when people put too much money in the market.
That's
and
exactly.
They're not used to like understanding that. Like if you invest in the market, just pretend it's going. That's the only way you're gonna sleep at night because you'll lose money like this.
Yeah.
It'll drive you crazy. Like even now, when I lose money now, I still get upset. But I have to tell me it's part of the game. Just chalk it up. Learn from your mistakes. Like you don't do futures and stuff like that, but I actually record my trades and I rewatch it, just see what I did.
What are futures?
Futures are.
That's not like the Forex stuff, right?
No, I don't do Forex.
Okay.
I know a couple people do it, but
there's a lot of people on Instagram that have
and a lot of them aren't really showing me their accounts either. But
I hear they comment all the time. They tell me they came across a great opportunity. But here's what I don't understand. I don't get how do they make money by recruiting me? That's what I never understood.
I have no clue. It's like I think it's like a pyramid thing, you know? Like
never mind.
We all make money together type of situation. But they make money from you signing up. They make money when you lose. They make money if you win money. They make money.
No, I'm good.
Yeah.
I'd rather go to YouTube and watch people for free.
But
what's futures?
Futures are pretty much you're watching the market and predicting if it's going to go up or down. It's like the future of it. So you can trade everything. You can trade futures of apples. You can trade futures of gold. I like ES, which is like the S&P 500. So the overall market, I usually trade that if it's going to go up or down, or bonds.
But like by minutes, you're up or down for a minute or an hour, a day, a week.
5 minutes. There's days. It's all up to you.
So you could be like, yo, in 5 minutes the market's going down. Let me know when you play it like that, so I could sell my stuff. When you're like, yeah, the market's going down here. Let me know so I can get rid of my stuff.
Yeah, and that's what I was realizing. Like, it works good for like swing traders or options because it's the same. Once you understand the graph and the patterns, it's pretty much the same. Now, overall, though, I'm not. I can't say, oh yeah, I made my money back. Still not. I'm in the negative overall for my trades. So
for futures.
For futures, my long-term stock portfolio, I'm good. I'm very happy with.
So why keep playing? Why keep playing futures if you're down overall?
I like it.
Well, how long have you been doing it?
Not even a year yet. It hasn't been a year. And I'm learning. It's
you like to keep doing it.
Yeah, I enjoy it because I know what the possibilities are. Like I've won on it, and it's been like wow, in minutes. Like
yeah, I just watch a few guys on YouTube, and they tell me the stocks that the guys I watch actually research their stuff. They don't just buy. They don't just tell you.
I like the way you said that. They actually research. Me, I just go by what I feel or what I'm thinking about.
They're the guys that put in the research. They do the due diligence. They don't talk about companies like GameStop and AMC and Express. They'll mention them, but they won't call it as a play they're doing, right? They're actually looking for long-term good companies. And so one guy, dude, he's always doing he does one video day.
Jimmy, you do like better? Do you like this view better or do you like the other one?
I like this one. I feel like it's closer.
Okay.
But yeah, dude, they're like, yeah, HOL or yeah, CCIV, yeah, this company, that company. I'm like, okay, great. Tomorrow, add it to the list of things to buy. And in the beginning, I really didn't trust these guys, so I would just buy 1 or 2 shares. I would keep it very small. But I can happily say the majority of them all paid off. The majority of every single company these 2 guys have talked about has made money. And I'm not talking about 1%. I'm talking about, I got things right now that are up 70, 80, 90% from these guys. Like CCIV, great pick from the bottom.
Give me 1 second. Someone on TikTok said, I have lots of first-time home buyer questions. Actually,
bring him on.
Jimmy's, you can't see him, but we're actually doing, if you follow me on YouTube, you will get to see the video. We're actually doing, Jimmy, you want to say hi? That's Jimmy. We're actually doing a YouTube live also. So if you follow me on YouTube, The Real Mr. Marcelle, you'll get to see that video. But ask your questions away. If you have questions on Instagram, feel free to ask us too. We're just talking about stocks and houses. But ask any questions away. Anyway, Jimmy. Yeah, like I used to, like, I don't do it now. Like when I first got started, I used to actually research the companies.
Yeah, I don't got time. They nobody got time for that.
I would go into profit and loss, check their expenses, check how many.
But truth be told, all BS aside, realistically, right now with the way the market is playing, does any of that matter?
No, and that's what's driving me crazy. It's 100%. It does not matter.
So, all right, so let's clarify. All that stuff does matter, right? It is important, but the market, the retail investor seems to value stories more than value. And hey, if stories can run us up 20, 30, 40, 50, 60%, here's what I don't understand. A company like Ford is an $11 stock. A company like GM, Ferrari is a $200 stock. GM is sitting at 50 something. Volkswagen is a $48 stock. You got Tesla at $900. You have companies that haven't even put a car on the road at $70, $80. And you're telling me they showed a great article. NIO is a $60 stock. It's ranked in the top 5 richest auto companies because of their stock, right? They put 4,000 cars on the road. Tesla is a $900 stock, put something like 40,000 cars on the road. Volkswagen's $48. They put something like 40 million cars on the road. Like that just tells me right there.
I'm like everyone loves NIO. I
know.
agree with you. Like I'm not the biggest fan of NIO. I just feel like they haven't done anything. Like pretty much what you just said. But the difference is
the only thing they have is that battery swap. So they're going to be swapping your batteries, which is a huge thing. And because Chinese will support Chinese over American, I think NIO is a great competitor for Tesla. But again, when you're investing in China, you have to be very, very, very careful.
Very careful because their books and their regulations aren't the same as ours.
Yeah. They're going to have to follow ours or they don't get listed.
They're going to have to follow.
Well, what they're trying to do, the last I heard is what they want to do is they're going to have American companies that are going to audit the Chinese companies to ensure everything checks out. If you say no, that's okay. You just won't be listed on the stock exchange.
But like I said, you can't go against Elon.
Right. So Elon has just done what Apple has done. They're building a cult following, but I just don't see that many people driving Tesla in comparison that own Apple products.
Yes, I feel like because the price is too high, but that's what he's working on. He's working on cheaper models. So I feel like once it gets more affordable, you get a Tesla for 10, 14,000. It's going to go crazy. The question is, if the bank loans me $2,000, I find a house for $150,000, can I use the remainder of the $50,000 on upgrading the home? What you want to do is that is a 203K loan. So you first have to get approved for it, and the bank is loaning you $200,000, not $2,000. So you have to get approved from it first. It's going to be a 203K loan, and you're looking at the second one. The first one is only 35. I think the max is 35,000. The second one has no limits. But for the second one, you're going to have a lot more paperwork. So speak to your lender first.
Speak to your agent. Make sure you have a good agent.
Yeah, because you definitely going to need a contract.
Because 203K, the full 203K, is that B? Is it 203K B?
Yeah. At least that's what I call it. I believe it's B.
Yeah, it's B for a pain in the behind.
Yeah, it's a lot more work. And it takes longer. And then you have to hope that the homeowner is fine with it. They could put the mortgage in. It's a lot more work. It's a lot more paperwork. So just be careful with that. But yes, it's going to be done.
A lot of paperwork. You got to show up with the architects. You got to show up with the contractors. Everything needs to be actually done the right way. You can't just hire your uncle who, happens to be a part-time carpenter. You can't do the work yourself. So there's a lot of stuff that goes into that stuff. Again, I think there's a lot of benefits to both that and the rehab conventional loan. Mm-hmm. But definitely you're jumping through hoops to get it.
You're going to be like Sonic.
Yeah. Oh, yeah.
I knew you would get it. You'll get to me.
That's how you ask people their age without asking people their age.
No problem. You're welcome.
Any more questions? We got any questions? Nothing from Facebook?
Today we don't really have much questions. Last time there was a lot more questions. Today we do not have that many. I don't know if everybody's
a stock expert now. Nobody has questions, including us. We know everything.
Last time, I feel like we had more people join this time, but less questions this time.
That's okay. Maybe I don't know. More
Before, or was maybe the snow wasn't heavy enough. I thought we planned it properly, where it was like gonna be a snowstorm. I was like, yo, no one's gonna have nothing else to do on a Friday. It's snowing.
If you think, yeah, we got snow again today. How crazy! I had to reschedule. I love snow, I really do, but I don't like when it's so much that the roads get all messed up, and then I have to cancel all the showings.
I don't know if it was just the roads out in here in Long Island, but didn't it stick as bad as like the first one? Like,
no, the snow was fine. Like everybody was free. They're like my family was like, "Why are you going to work? There's a blizzard coming." I'm like, guys, I'll be fine. Like I just got to do a few things, and then I leave. At one point, I go outside. It was like 3 PM. I'm like, the snow has completely stopped. What was everybody freaking out about? You know, but yeah, real estate. I think there's some good opportunities right now. There are some good opportunities, even here in New York. It's just I know that my offer, right? So me as a real estate agent, I know probably the offer I'd be submitting on a lot of these properties that are on the MLS and things like that is not going to get accepted, right? Like I'm not waiving contingencies because I know better, right? So it's not something I want to go run around in. Like I had some friends that recently started trying to find a foreclosed property and they're first time buyers and there was a house that, what's that?
The first time home buyers and they were looking for foreclosed property.
Yeah, because it's a great deal. You could put $100 grand into it, and it'll be worth $3 million. The American dream. That's what they were looking for. But they soon realized they're like, yo, look at this property on the auction. It's $600,000. I'm like, that's definitely not the reserve price. House gets bid up to 1.1 million, and it turns out the reserve was 1.2, so it didn't even hit the reserve.
We got 2 more questions. We have one that says, the same lady, she says, I'm in Houston. She said something, I can't see it. It was like an emoji, I guess. But I'm looking into more older homes for my first time home, and then I'll be upgrading. That's a good idea. I feel like everyone should start with a smaller home for the first house, just to get used to being a homeowner, because it's definitely difficult and it's a lot more versus getting something big that needs no work or something like that, because you're getting a bigger mortgage and then so you don't know what it is like to have a home. So start small, start below your budget. If you think you can afford $3,000 a month, start at 25 and then save that more and then go higher from there. Don't start at the top of your budget. Like, oh, I can afford it. A lot of times you don't realize that new roofs, like even on houses that are like brand new, they still have issues or things come up. The tax bill is more than you thought. The light bill is your first time paying your own electricity bill. So it was summertime, like, oh, that's nice, it's cool. And then you get that $500 bill in the mail.
That AC bill.
I got to pay this? You telling me I have to pay this whole thing? So be careful with that.
I would say here's my take on buying a smaller house and upgrading. Be very, very, very careful right now because you're not guaranteed that, like, put it this way. We've been appreciating, right? Our values have been appreciating since about 2011, 2012. I can speak on behalf of New York. But what I do know right now is almost every single suburb market around America, the prices have jumped. Oh, the home prices have gone to the moon more than GameStop has. So I was always a big proponent of, yes, buy the co-op, then move into the house, right? Or buy the multifamily and then move into the house. But you know what? I don't know if these prices can keep sustaining themselves, right? So let's say you were to buy a smaller house right now and the market next year and the year after dips by 1% or 2%. Well, you're not only losing 1% or 2%, you're losing all the closing costs, right? You're going to lose right off the top 4 to 6% to resell it just for real estate fees. And you know this much better than I do. The first 7 years, you're only paying interest. How much of your money is actually going to principal? Very little, So right now, I think it's a really, I don't know how to advise people. And it's a scary thing. When I don't know, if you were to come to me and you're like, Jimmy, I want to buy a small house. And then in 2 years, I'm going to sell that and buy a bigger one. My first question would be are you okay with losing money potentially?
Well, And then two, also, it depends on what your goal is. Like I tell everyone, don't start with a single family. If you're getting a
How
multi-family,
always, yeah, go for the
that's
multi.
what I wish I would have did. It would have been easier. We have another question that says, "How do you get your debt pay off to post quickly to show a speedy prospect purchase on a property?" So, how do you show your debt to be paid off quicker?
Like, how do you pay it off quicker, or how do you make it appear on your credit score that it got paid?
I think it's yeah. How do you show it on your credit score? Well,
Rapid. Bing! I have the answer. Rapid rescore.
That is one of the ways that we use. And then also, if you paid off, you can actually show us the paid off bill, and we'll just erase it from your DTI altogether. We'll be like, no, it's paid off. You don't have to worry about it. But yeah, once you rapid rescore, it'll show it. And then two, you can also send it to your credit. Like you can, people don't realize you can talk to your credit bureaus because they are a business. So you paid off, be like, hey, why is it my credit?
Some crap. They're a business.
They are a business. They have to answer to their customers. Like
half of us don't even want to be their customers.
So
like, you fire us. Fire us. Our credit is so bad. Just fire us as employees. We don't want to be here as customers.
Exactly. I think we have one more other question. Does it make sense to put down 20,000 down? I want a reasonable mortgage. It depends on what you're doing. 20%, that's 10%. If you're getting a mortgage for 20,000, you're putting 10%. Going FHA. Depends on how long you're gonna be there too.
Let me ask you a question as a lender. Why is it that I'm seeing 10% pre-approvals more often being FHA than conventional?
Because I think it's two reasons. One, the first reason is being when you put down 10% on FHA, especially if you're gonna stay there long term, you can actually get out of your PMI. A lot of people don't know that. So I don't know if
on FHA,
10%. That's one of the rules. It has to be 10%, and then it will come off in I think 11 to 12 years, something like that.
If you put down less than 10%, it stays on forever.
Forever, till you get out of FHA.
Gotcha.
I don't know if lenders are being more smarter and telling people that, because I realize a lot of lenders don't give people these information. That's the whole reason why I started this TikTok. Even while we're doing this, like a lot of this information, lenders just, it's like a secret, and it's like, why? Like I don't understand. You should want to tell people this information because it's going to help them, and thus return is going to help you back because they want to give you clients or whatever. It's a full circle. And then the other reason why I think it's the same thing. People have this concept that, hey, if I put more money down, so I make a big difference in my pre-approval. And it turns out it doesn't really do much for you.
Nah, man, you got the way people look at pre-approvals is everything under 20% is one bucket. You have 20% to, I would say 30, even 40 is your second bucket. Honestly, after 20%, it doesn't even matter. It's really less than 20, 20 or higher, and cash. Those are the three buckets that I would look for as a listing agent. All cash, above 20, or is it below 20? If it's below 20, you're already a backup offer. Already.
100%. Because they look at it, they say FHA, and you tell me why. Because I was having a lot of issues with this. Why do realtors see FHAs always being a bad?
Because the appraisal is harder. It's the appraisal. And that hold on. FHA also has a very bad stigma historically, right? Like the FHA loans were doing some, I don't know all about it because I haven't dug into it, but I've heard a lot of crazy stories about redlining and the opportunity zones, quote unquote. And there was just, since the beginning, the FHA loans have just had a bad stigma. And then over the years, they became known as the loan that's harder to get closed. And it was usually because of the appraisal. Like if they find chipped paint, you have to fix that.
Yeah, that is true. FHA does have a stricter appraisal, but it's not that bad. I haven't had an issue where it's like, oh my God.
Me neither.
Like minor things.
Right.
And two, the opportunity zones are actually really good for investors. It's
now
not a bad thing.
Now.
Yeah.
Not in the 60s and 70s.
But then at that time, everything was hard for minorities. So I don't really hold it against FHA. I think it's a good way for minorities to get loans now. Not even minorities, anyone, especially if you have bad credit, 500.
Yeah, the way I look at a lot of these programs is just based on economics. It's all economics. Like if you have a bad credit score, if you have a lot of debt, well, then most likely you're going FHA. If you have more of a vanilla file, then you'll most likely be cookie cutter and can fit into conventional. And then if you happen to be in the Army, there's VA. Other than that, those are really the only three.
Now, do you guys, as a realtor, I always wanted to ask this question. Do you also consider like, hey, VA over FHA or VA over conventional because they were in the military? Like, is that some kind of
look? Having been in the lending industry, when I looked at how VA loans were qualified versus conventional and FHA, VA loans are actually the most qualified because they look at all the financials of the borrower, not just what's on the credit. At least that's what it was when I was doing it. So overall, I see a VA loan as a very strong loan. The issue becomes is because it's 0% down, you have to find out what the buyer's willing to put at the contract deposit, because it really doesn't matter overall the down payment. It's what are you putting down at contract signing, number one. And then number two is it going to pass the VA appraisal? Because to my understanding, it's kind of like FHA.
Yeah, that is true. And then also,
like I had a house that we had a VA loan. We got an accepted offer. And I told the listing agent, I said, listen, these are things that are going to happen. I coordinated with the lender. I told the lender exactly what was going on with the property. There was like no handrails going up to the second floor. There was no door for the basement. There was a lot of hazard. There was no railing going down the stairs outside. And I told the listing agent, listen, if you're not willing to take care of these things, then my buyer can't move forward with the house because the appraisal is going to force us to get it fixed. And my client doesn't want to pay for all this stuff. So if you have no intention on fixing it, let us know now and we could just kind of walk.
Yeah, save us all some trouble.
But the truth is to me, I don't care about the loan. I never cared about the loan. I care more so what's the down payment.
That's what you look at.
The higher down payment just gives us more wiggle room. If you open a new line of credit accidentally, you have more space with a conventional loan, or not even conventional, just overall 20% or even 50%, 10% down. You have a lot more wiggle room.
We have another question. Does every loan officer know about rapid rescore? The good ones do. So if the loan officer doesn't know about it, he's not a good loan officer. So I would run away.
Listen, I'll say this: when the market was down, like when it was hard to find clients, everybody knew about rapid rescore because they were trying to make the worst of the worst deals work. Now there's so many buyers knocking on the door. It's just like, dude, I could sit here and get your credit and your file to be acceptable. But at the end of the day, it's probably not even going to get an accepted offer. So why am I wasting my time? You know, it's just hard to have a conversation with a buyer like that and be like, listen, I don't think you should be looking right now because they're just going to go to somebody else.
It's super hard. What do you think about this? This is one of my tricks that I do as a lender. You let me know as a realtor what are your thoughts on it. I send like I don't know if you ever heard of what is the app? Now I'm drawing a blank. Video Bombs.
Yes, I've heard of it.
I send it to the if because not all realtors like when I call them, but the sell realtor, I'll send them a video introducing myself, saying, hey, this is my client. Pre-approved them and everything like that. I just want to introduce myself. Here's my number. Feel free to reach out to me if you have questions on the file and you can't reach the realtor. I always tell them to go to the realtor first, though, you know, because I don't want the realtor to feel like, hey, he's just overstepping. But I want the seller to know, like, hey, I'm open. Call me if there's a question on the file because I want everyone to feel like, you know, we're all in this together. It's not like, oh, I'm secret.
Yeah. Listen, there's been many times that I've had not sellers call the lender, but I've had listing agents reach out to the lenders and vet. Like one deal this summer, probably one of the, oh man, this agent just so annoying. But they had a terrible experience. They were one of the sellers. So I said, listen, call the lender. Call the lender. Let him explain the file to you. Like if you're really curious about the financials, go ahead, ask whatever questions. And if he's legally allowed to answer it, he's going to answer it, you know? And sure enough, that's what won us the deal. So you have to have a loan officer that's willing to communicate, because if they're not,
yes, 100%.
If they're not, and the listing agent calls and the guy has no clue what's going on, it's not a good look, especially
Wait,
when you're, yeah, right. Yeah, when you're neck and neck with another offer, like if I'm the loan officer and you're the loan officer and I get a call and it's like, oh yeah, you're calling about Bob. Bob's a great guy. Got 20% down. His DTI is 22.9, whatever it is. And then if they call you and you're like, oh, who's that client? Well, that client might not get the house now, and my client will, because everything made sense and was easily accessible. So definitely keep doing that, man. Always give everybody the opportunity to reach out to you if they have questions, because ultimately there needs to be communication right now. If you don't have communication, it just makes life a lot harder.
Super hard. Hold on, we're going on a quick commercial break, all right? Anything that you want. You like that? That was pretty cool. A little commercial
That was
break.
good. I like that. I was when you said we're going to commercial break, I'm like, what? Are we having more technical difficulties? Do we need to reset the system?
We have one more commercial that I set aside, but I'll do that right before the ending. We already hit our target already. It doesn't even feel like an hour. So you want to stay on a little bit longer?
Yeah, the hour went by really quick.
I think it goes by when we're talking about things that we're passionate about. We have a question. Will the housing market go down or up? I'm looking to purchase a home this year. Well, if you're looking to purchase, you waited too long for rates, because I kept telling you guys, I kept screaming it on my Instagram, my TikTok, YouTube. Rates will be going up. Guys, the low rates that we have were only due thanks to the Feds pumping the market. Same thing with the stocks going up like that. It wasn't normal. This is not a normal market. The rates aren't supposed to be this low. So now rates are starting to go back up to where they should be, and clients are like, oh my God, the rates. I'm like, I've been telling you guys. So the rates are going to go up. Will housing go down? No, I don't think houses are going to go down, at least not this year. Maybe.
Yeah, look, supply and demand. Just understand supply and demand and follow the chain. My best advice is, whatever market this person happens to be shopping in, find a great agent and start looking at the numbers. Nothing else matters. Like every month I look at the numbers of my county and I look, are the days on market going down or are they going up? Is there more properties coming on the market than going under contract? You know, what is the median price doing? Is it rising or is it falling? And November, December, January, every single month, we've had prices higher, amount of sales higher, new listings lower, remaining inventory lower, and days on market down. And that just tells me that most likely this month is going to be the same exact thing. So I really don't see, but I think everybody's waiting for that crash. I think our generation just assumes everything good dies.
Yeah,
because that's what's happened our whole life.
And they don't realize, like, the government isn't stupid. Like, they learn from their mistakes. They realize what happened in 08. They're like, oh my God, this how many people lose houses? This how much money we lost? No. That's going to hurt the economy. And the bottom line is that they're looking at a world power. We have to keep our economy up for other countries, because then other countries going to be like, oh, they're weak right now. Money plays a tool, and it goes in different aspects. It's not just you. You got to think of the world economy and other things like that. So there's other powers at play that are keeping the market up.
Yeah, I don't think we'll have that crash. We just based on simple economics, it's impossible to have that crash right now, unless, unless we shut down and more people are unemployed and less people have. I mean, obviously, less people would have jobs if more people are unemployed. That's stating the obvious, but you get my point. So I really don't see it happening anytime soon. But I'm tracking it in my market. I track it monthly to see what's going on. But
what's
again,
your market again for the people watching who want
what's that?
What's your market for people watching if they want to do some business?
So primarily I handle Westchester County, New York. I'll handle Rockland County. If it's for listings, we can handle them in the Bronx. We can handle them in the boroughs. We can handle it in Long Island. But primarily Westchester County is my bread and butter. And our prices, along with Long Island and Rockland and Westchester, Sullivan, Putnam, the Bronx, they're all going up. They're all going up. Well, here's why I'm shocked about the Bronx. The Bronx is it's a densely populated area. And my assumption was that we'll see people leaving the Bronx more than we'll see people buying in the Bronx. And that wasn't the case. The Bronx's market and their prices actually went up for the fourth quarter.
Everything went up. That's why I'm hoping that it stays like this, at least for a little bit. I need to buy a couple more houses. My goal was to do at least 5 to 7 flips this year. So hopefully.
That's a good goal, man. That's a good goal. Listen, again, it goes to the 1% rule. I had an investor. She was okay with flipping 10 houses a year, and she wasn't greedy. She's like, listen, if I can walk away with 50 grand after all is said and done, I'm good. That's easy.
You can get that off one flip.
And that was her goal. 50,000 every flip. She wasn't looking to make $1 million. She wasn't looking for the best deal on the market. She's like, can I buy this for 5 and somehow make 50,000? If I can do that, and if I do 10 of these a year, bro, that's $500,000. Shit, if you do 5 of them a year.
And 100%, that's very doable. I like that. My goal depends on the house. Like some houses, like one of the houses that I'm doing now, I have partners in it, so I won't be making 50, but I'll be making enough where it's like it still makes sense, you know?
Yeah.
So that's very good.
Look, man, that's one of the problems, I think. More people don't realize, think about this. Forget about the fact that GameStop was like a fluke. Enough people got together and banded together with their money to take down Wall Street hedge funds.
Well, not all of them, because some of the Wall Street money, like I don't know if you checked, there's a website that shows the companies. Some of the companies didn't say anything, but they were holding it too. Like they were in it when people were like, "Oh,
right." But the point is, we were able to, whoever held that company were able to rock an entire market, right? So I think too many people are under the impression that you have to do this on your own. You have to wait to invest in real estate. I think it's a great idea. Hell, man, if there's 5 people that can band together, buy a house, flip it, and each walk away with $10,000 or $5,000, shit, even $1,000, who cares? All you need to do is keep on doing that over and over.
And that's what people fail to realize. And I agree with you. It's the fact that stop looking at how much money you're making. Look at the percentage, because you will keep making more and more money.
Especially if you band together. So don't be shy. Dude, some of the most successful real estate investors I know, they started their first house. It was like 5 cousins. They would buy a multifamily together. They would buy the second one together. They would buy the third one together. Now they each have enough money coming in. Maybe one wants to go buy one on his own because now he's got 2 or 3 properties he collects rent on plus his job. So he's like, you know what? I'm going to go buy one for myself. And that's how they started. They banded together. They would buy 2, 3, 4, 5 of them. Then each person would kind of do it on their own and just continuously move on and get more and more. And dude, there's guys that started with 1 house and 20 partners in it. And now one guy has 20 properties, you know?
The same thing could be done with stocks too. If you guys, well, not on a particular stock, I would say that's more for like an option move. Like if you see an option, like example, like I'm so mad I didn't do this. Like I knew Zoom earnings were coming out. I knew I should buy into it, and I saw the price tag of $8,000. I was like, yo, I'm not spending $8,000. But I had 5 friends that were willing to do it. Yeah, the option calls on Zoom was crazy. I see your face. Everyone puts in like 1,500. We're good. The thing went to like $30,000, $40,000 on the calls for it. So yeah, it does.
So here's my question: if you were so sure it was going to go up, you should have just did it on your own.
No, I didn't want. Yeah, I was like 85% sure that was going to go because plenty earnings are risky, and I've done earnings.
Agree.
For company, like I've done it for a Dropbox. And I still don't understand how it showed earnings, it showed positive, and it still lost money. I've played earning calls, so they're very risky.
Yeah,
like, super risky. A lot of people say they play the week before earnings just to get out, but like the Zoom one did phenomenal.
Yeah, I noticed that a lot of companies, as long as there's not a broadened market sell-off, a lot of the companies run up to earnings, and then I try not to hold through earnings unless I have it so low. Or if I really believe that it'll be good. But most of them, like I got into AMD, as soon as they announced their earnings, everything came back positive. I'm like, here we go, baby. We got a winner here. You know,
we got a question. The banks need to give back, I guess, money to the borrowers.
The
I
bank
feel like
needs to give money to the borrowers.
we give back monies. I guess this is from when you bought and they were like, I guess, over evaluating properties. So I don't think it's gonna happen. I don't think the banks will ever give back money. But a lot of the policies and the rates that they were charging people, even they knew the property wasn't worth it, and they were still selling. You know, when the real estate market is too hot, sometimes the appraisals come back, and you're like, what? So I think you got caught up in something like that. But I don't think the
Yeah, I
banks.
know there's something in the contracts when we sign up a property for sale, they have to sign something called the Home Equity Theft Prevention Act or something like that, that they understand that if they're caught in bed with a lender and an appraiser artificially inflating the value of their home, that they can do jail time, which obviously somebody got caught doing this stuff, and that's why it's a law now, right? Always somebody got caught.
Someone
So
or a lot of people.
thing, man, let me ask you a question. You're a lender. Are you seeing appraisals come back with issues right now or not so much?
Yeah. Well, I don't think they're over evaluating it. I think there's a lot of issues. Like I have one deal, and the appraiser just started asking for things that made no sense. It's like a mother daughter suite kind of property, and it was like, oh, why is there a kitchen? I'm like, because it's a mother daughter suite. Like that, I feel like, and I think the issue is like with the appraisers, they get appraisers. Like you can get appraisers from anywhere. So a lot of them don't actually know the market that they're doing the appraisal in because they just Google the comps and go in it and they see it and they're like, oh, it's a single family. Why does it look like a two family? But if
Right.
literally all the other houses are like that, then it's already set up for it. Then so now I have to go back and explain this to an appraiser, and I have to fight the appraisal to show like, hey, this is nothing wrong with it. Either that, or I'm going to tell the homeowner that, hey, you have to move this, cap this off. It's going to give us a lot of work, and it's just like
I had a listing where the seller was like 90 years old, and I had to go there and move the stove out.
yeah, you put that work in.
That dude, that and a washer dryer. You know the ones that are
unit that's connect. Those things are heavy.
Oh my god, bro! I just couldn't say no, man. The guy was just, I just couldn't do it, man. Like I don't know, I got a soft spot for old people.
Someone said, explain what PMI is. PMI stands for. I just drew a blank. Private mortgage insurance. You know when you're about to say something and it just like fades your.
To me, it's just a risky fee. That's what I call it. You're high risk, so they charge you a fee.
Yeah,
if you default, well, at least they made something.
It's pretty much they're charging you insurance in case you default on your property, and that protects the lender, not you. So if you default, they have money that they set aside to cover you defaulting. They're pretty much betting against you. And once you own 20%, at least 20% of the property, you can get it removed. If you guys have any more questions on TikTok, Facebook, or Instagram,
they're basically betting again. They're going short on the buy.
They are. They're going short on you. And then they're still making money on both ways. If you don't pay, okay, cool. They still keep that money because there's literally the money. They still keep it. Whether you paid on time, you never.
Oh boy,
you're still keeping this money though, just to let you know. But thank you. And then if you go short, oh well, we already knew this was coming, so we bought insurance just in case. They're winning both ways. It's like
I think you should get that back. They should give that back to you.
I agree with you. That I feel like we just need to start a bank. I want to charge PMI too.
Let's just start a new country. Clearly, this one doesn't know how to get run. We'll start our own. Wait. So here's what annoys me.
Out quick. I don't know about that one.
What's that?
They're gonna try to kick us out. You're trying to start a country that is an act of war against the United States of America.
That's okay. Somebody's got to start one with the US of A. They haven't had one in forever. They're getting too comfortable being the schoolyard bully, doing whatever they want.
You are more than welcome. No worries there. If you guys have any other questions, feel free to ask. I think we should start later next time. We're getting a lot more traffic now.
Yeah, I don't know. I guess people are up late.
Yeah, these are night owls.
Yeah.
All right. Do you guys have any more questions before we end this live? We've been on about an hour and 15 minutes now. We went longer than we thought again. And we're just here to help you guys. Jimmy is over here on the main screen. If you guys can't see, that means you're not following me on YouTube. So go check out the YouTube and you can follow Jimmy at Jimmy Odd 1. And let us know if you have any questions. Real estate, mortgages. What up, bro? I retake the test March 5th. Oh, congrats, Larry.
Which
From
test?
he's becoming an MLO. I
Nice.
started giving advice. Like my YouTube was never supposed to be about mortgage advice, like for people becoming loan officers, but they started asking me questions about it. So I just started making videos about to help loan officers, and he started asking.
Yeah, you know, that's one of the things I like, dude. When you're in this business, that you can do so much content for people that are thinking about getting into the business, but then everybody tells you, oh, stay niche, and you know, either talk about for buyers or like I've even thought about it where I'm like, listen, there, you know, I should make a video on what gear I use, how did I learn how to edit my videos, and blah blah blah. And then it's just like, well, are you gearing your content towards realtors, or are you gearing it towards, you know?
Well, you actually helped me get out that phase because, like, Raph, I love him. He was saying originally, like, my content was too all over the place. So I did a lot of content on mortgages. So I feel like my mortgage content is strong where people know, hey, he does mortgages. Like, they understand.
Right. There's no question about it.
Exactly. So even if we branch out on other videos, and it's not going to deteriorate the page because you're still giving helpful information. And that's the bottom line. Your goal is to be helpful. So if I can help you and show you my real estate content and show you how I edit my own real estate content, you still know I do real estate. I'm just showing you how I edit it. It's not like you're changing your whole channel and just talking about this and never talking about real estate again.
Yeah, and that's how I felt with the food reviews. I mean, we did 2 of those so far.
Yeah, I seen the last one. It was like I think it was tacos or something like that, right?
Yeah, and believe it or not, they've been performing pretty good. They're definitely, I would say, doing the cost of living in series where we talk about what it costs to live in certain areas in Westchester. I think that one and the food reviews are the 2 most dominant, which is strange because we talk about market updates, we talk about the process, we talk about A to Z, but those 2 are the dominating ones. And I figured, you know what? I love food. Number 1. Number 2, there's a lot of local places that are in the areas I cover as a real estate agent. So Zillow can give you the listing price. Zillow can attempt to give you the correct taxes and all that stuff and blah, blah, blah.
Don't use Zillow to estimate your house. If you're using that, I'm telling you, it's not always right.
Yeah.
Please, guys, please do not use it. People come to me, well, the Zillow estimate is saying my house is worth this.
So you want to hear the craziest shit what they're doing to us as agents? They're putting out bulletins to every single company that if we try to go against Zillow now, since they have a broker's license, it will be considered a violation of the antitrust laws, and we will be prosecuted to the fullest extent of the law. What?
Like if you don't agree with their price?
No, like if you decide to, like if us as agents decide that collectively as a group we want to stop working with Zillow, we'll be violating antitrust laws.
I'm confused. What do you mean stop working with them? Like stop doing ads and stop promoting?
Stop giving them our properties. Stop giving them our marketing money. Stop giving them everything.
Why people end up doing that? I said it from the beginning. Zillow was too big. I want to invest in Zillow, of course, as a stock, but I think you guys created a monster with that.
We did. We allowed the monster and we kept feeding it.
And everyone was like,
a gremlin.
It's not going to come right now. It's fine. It's helping me. No, They were planning this from the beginning. And what's crazy is they said it. They said they were planning this. It's not like they didn't tell you guys. So
yeah. But and that's why they say be what was the phrase? Beware of the bearer bearing free gifts or something like that.
I don't know that. You lost me on that one.
Yeah, basically all it says is nothing is free. And I heard an interesting thing on the radio today where they said you might think TikTok is free. You might think Instagram and Facebook and YouTube and all these services are free, but in reality, they're free because you're the product. And they're selling you.
Yep, your information, what you watch, the videos.
Oh, when I heard that, my mind was, I'm like, wait, did he just say I'm the customer? Meaning they're selling me. And then I was like, holy shit, he's right. They're absolutely right.
They look at how many users they have per month, and that's how they calculate, oh, the cost of this company is worth this because they have this many active users. Like, I don't know. I'm big into anime. So Crunchyroll sold to Funimation for 1.2 or 1.5 billion dollars. And people are like, how is that possible? Because they have 100 million active users. 100 million. You
Right
tell me
there.
someone's giving you 100 million customers, you guys want to be like, what? I wouldn't even know what to do with 100 customers coming in the door right now. Like 100 million? Come on.
It's crazy. But back to your point, don't use estimates. They're
use
definitely not accurate.
This is why you need agent friends, because they have access to what's called the MLS, which is the multi-listing service. Right?
Yep, multiple listing service.
And they can give you comps of houses recently sold within the area, within a certain
You know what's crazy? I'll put people on the MLS and they just flock right back to their favorite website, Zillow, Realtor, Trulia. Always.
I think it's because the way it looks. I think that's what catches people, the way it looks.
But here's the thing is when you literally go on the MLS versus Zillow or whatever, it's like me telling you to go use 1997 Windows versus 2020 Windows. You know what I mean? Like, it's just the operating system. I don't know. I don't understand. I've tried to use Zillow to search for properties. I don't understand how people do it. There's nothing you can search by. You can search by bed, bath, square footage, area, and price. On the MLS, I could search by school district. I could search by taxes. I could search if it has a pool or not. I could search for blah, 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 blah. I could search for anything.
I think it's the way it looks, though. Like, I've seen the MLS and I've seen Zillow. Like, Zillow looks more appealing. You know,
it's much more visual.
And that's what sells. It's all about perception.
Yeah, but when you're looking for information, that visual stuff is worthless.
Yes, but you know that as a realtor. You know that information. But if someone's coming, it's like, oh my God, look at this brand new shiny car. It looks better. And the whole thing is it's lemon. The whole thing inside is horrible, but it looks good. And people believe like, oh, it's better. And I think that's what they captivated people on the looks of it. It's easy.
That in the marketing.
Great.
They just spent dollars. They gave
them so much more budget. And then they went to the loan officers, hey, you can do it. I'm waiting for it. They're gonna get their broker's license, and then they're gonna say, hey,
they have it
for mortgages.
Oh no,
they're gonna say, hey, we'll give you a lead, and we want a percentage. It's coming, 100%. They're gonna be brokers. Either that or
here's what I don't like is I have to now pay for my rental listings to go on the MLS. I mean, to go on Zillow. Before it was automatically streamed from the MLS. Now I got to go pay for it, and that's okay.
They have shares now. They have to show revenue increase.
Yeah, because the investors put pressure on them because they're still not profitable.
Mm-hmm.
And the agents started to, over the last few years, the agents have stopped using them.
About time.
Like, they're like, why are we going to pay your money? Like, but they're going to hire agents. It's only a matter of time. Zillow just bought Showing Agent, which tracks how to book showings. I mean, showing time, right? That's our system to book showings. And they're buying that now. They're going to get Zillow to
like, oh, you're trying to get rid of us? Now we're going to buy everything that you guys need just to make sure you guys use us.
Yep.
So where should we go? I'm not sure what your question is. Anderson 7. I'm not sure what your question is, but can you put your full question in? And Larry,
he's probably asking where should they go for the websites? Like, what website should they use?
Get onto the MLS as soon as possible.
Find a realtor, let them get them to sign you up. It's free.
Because especially if you're going to do business with them, you're making their job easier for them. Just don't waste their time. So if they're giving to you, don't ask them 100 million times. Like, people don't realize time is money. So like, we're doing this questions, we're doing this, but a lot of times people charge for this consultation call because time is very expensive. We spend a lot of time and money getting this knowledge. Like, that mortgage course was no joke. To study that, you took it. To study the course, the practice course, and to take the real course, it's a lot of time and money. So
I remember when they first introduced the 1 year that they introduced sexual harassment, the test, like one of the tests, one of the 12 that you had to pass for your continuing education. The entire bank I worked for, we all failed. Every single loan officer, we all failed.
I got this.
Yeah, because they had silly questions. Like, if you see Mary at the water cooler and you tell her she looks pretty today, is that sexual harassment?
Yes.
Yes.
You're not allowed to say that stuff. Like, everything is.
That's what's messed up with the world. I can't even compliment somebody. Sexual harassment. That's a problem.
I was gonna tell you your hair looks nice today, but I didn't want to get sued.
Yeah, right. Screw you. Make some quick cash. Let's see if I can get a 1% return on that.
Do you guys have any other questions? Anything you want us to answer? We're about to hit an hour and 30 minutes on this live. Let us know if you have more questions. I'm on with my man Jimmy. He's a realtor in Westchester, New York. If you guys have any questions, if you're in Westchester, New York, and you're thinking about buying, Jimmy definitely said he'll give people access to MLS for free. So if you guys have a question, this is a great time. Or if you just want an email, you can DM me on Instagram, real estate. I'm bugging. You can DM me on YouTube, whatever social media you're watching. There's too many to follow. And then I'll give you Jimmy's Instagram. I haven't given you his phone number. Just no prank calls.
Dude, that was my first experience cold calling. I would just take out the phone book. I would have my cousin on three-way, and we would just go down the list of who's calling.
I think people don't do enough cold calling, door knockings now, and that's why they're too soft. Like I
tried cold calling, bro. It's not something I enjoy.
But it's not the fact of enjoying it. It's the fact to get over hearing no. Hearing people tell you no, hang up on you. And
here's my problem is if somebody's rude and I want to be rude back, I can get sued. They can't.
You got to be nice. You just go, okay, thank you. And take it. That's it. Just move on. I use it as training to get used to hearing no. So when people tell me no, it doesn't bother me.
When I first started, whoever told me off, I would like make it a point to constantly look up their property and pray to God it didn't sell. I'm like, you're such a douche. I hope your house never sells. And I was like, this isn't
gonna sell. I'm putting a curse on you.
Yep. And then when they list it with a new agent and it doesn't sell, I'm like, see, I told you.
I told you I would have did it. You didn't want to listen.
Yeah. Yeah. I can guarantee the sale of every house. You want to know why?
Why?
Because I won't take a house I don't think I can sell.
I thought you was going to say because my marketing plan is so amazing. I do research.
Bro, let me tell you something. No amount of marketing is going to sell an overpriced listing.
That is true.
Not with access to information the way we have now. Bottom line, I will have that debate with anybody, anytime, any place, anywhere. Come see Jimmy. I don't think it's possible. I don't care how much money I throw on marketing, bro.
Guys, if you have any questions.
And I make some pretty good videos.
You do. Very, very good. Very good videos. I definitely watch it. If you guys have any questions, let us know. We're going on a quick commercial break. YouTube, Facebook, hold on. Friday at 8 with I don't know who yet, but we'll be doing this again. If you guys like it, if you guys want Jimmy back, let me know. Put it in the comment sections. Just go Jimmy, thumbs up, something, guys. Give me some reaction, and then we'll see what we can do, guys. Jimmy, anything else you want to say to the people before we end this? Oh, so let's go back to the question. Which one would you pick, stocks or real estate, if you only had to pick one?
For this year, I would pick stocks.
Okay, this year. I'll take it. I'll take it.
Yeah, guys, I'd go all in on the stocks.
Real estate is king to me. Will always be king. But I do agree, diversify your portfolio. But if I have $1 million, I'm playing at least 70-80% in real estate.
Yeah, I'll just play all $1 million in the stocks.
That's it.
I mean, if I could get 1%, what's 1% of $1 million? I've never invested $1 million. So 100,000.
1%, right?
Yeah, 1%. Yeah, because 10% would be $1 million.
Yeah.
So think about it. If I play my strategy of making 1% a day, woo!
I'm starting to guess my own math. Is it $10,000? Did I do that?
That should be $100,000.
Yeah, it was 100. Okay. Yeah. I just want to make sure this is live on YouTube. I don't want to look like I can't do math.
You give me $1 million and play. If somebody gave me $1 million and I played the 1% rule, that means I'm turning around.
I don't think you would be able to put $1 million in one stock. If that's someone gave you $1 million and you're putting it all in one stock to make 1%, you would.
Bro, I have how much do I have invested right now? I have actually in purchased stocks 15,000, and I have 62 companies. With $1 million, I'm buying the whole stock market. I'm gonna buy one of everything.
No, I'm talking about, would you put it in one company?
No.
That's what I'm saying. Like, if you had $1 million, could you put it in one without?
No.
And if this $1 million, if you got this $1 million, you would put the whole $1 million in the stock market?
Yeah. In New York, what else am I gonna do with it? Oh wait, actually, yeah, I still would.
You're crazy. I couldn't do that. If I had $1 million, I couldn't put the whole thing. I would comfortably put 100,000, not a whole million. I couldn't do it. I wouldn't be able to sleep.
Well, when you say it like that, I get another $1 million next year?
No, it's a one-time deal.
One time,
$1 million.
No, so here's realistically what I would do is invest. I would comfortably invest 400. Like if I had to spend it, right? That's the rule. I have to spend it.
You can't save it.
Yeah. What I would do is put $500,000 right now into companies and leave another $500,000 cash and slowly buy in as needed. That's always been my thing. I never put all of my money in. I always keep enough liquid. Like this time around when I started the portfolio back third week of January, and since then I'm up 1,800, it's go in at one share for every company. And then if a company happens to drop 10%, well, now I'm going to buy 2 of those. And then eventually I'll end up with 5-6 shares, especially if something I know is a good value and it goes down even more. I'm just going to keep buying more of that as it goes down, right? So for me is I always want more liquid than I have invested. I'd love to put all 25, but I'm too scared of all these people that keep saying the stock market crash is coming. The crash is coming. We're in a bubble. It's going to crash.
I don't mind it crashing again. I have some money just saved waiting.
So here's what I heard. This time it's not going to be down. They're saying if a crash does happen, it's going to be slow, steady, and painful over a long period of time. So it's going to be like a gradual decrease, right?
That hurts. I like to straight down and then slowly start.
Yeah, just fucking rip
my heart out one time.
Rip it out. Just let me get back in at the low amount then.
Yeah, exactly.
Don't do it every day, little bit. Oh boy,
Jimmy, it's been a pleasure. I appreciate you. Thank you for taking the time out your day to hang out with us. Thank you guys for hanging out with us. We really appreciate it. This video will be on YouTube and Facebook again. Rewatch it. Follow Jimmy, please, because he's an amazing guy. He's one of my good friends now. And if you guys have questions, let us know. Jimmy will be watching, especially YouTube. Jimmy answers the questions before I get to it. Jimmy be on it. He'd be like, "Oh, yep." Jimmy be on it. Jimmy's quick.
I love YouTube, man. I'm always watching something. Always. If you guys like video, if you guys enjoy that stuff, one channel I highly recommend on YouTube is a channel called Studio Binder. They show you how to make films. They show you frame angles and ISOs and frames per second and directing techniques and color techniques and all. It's a great channel. I highly recommend. If anybody loves entertainment or video or stuff like that, check them out. Studio Binder. I'm not even getting paid to say that.
No payment.
No payment. But thank you guys for joining. I appreciate it always.
For joining. We appreciate you. Let us know if you have more questions. If you do, wait, I'm about to end it, but someone has a question on Facebook. Last question. Good night, Jimmy. If you put 500 down in a stock, which goes up by 300%, what would be your strategy?
Take it and run. It depends on the company and why it's up so much. Like if I got into a company like WorkSport that was 13 cents, and the reason why it went up to 85 cents was they had gotten some type of patent approval in China, right? So now that stock from 13% to 85 cents is definitely up 300-400%. And it's not a company that I plan on getting rid of because I do think it can go from 85 cents into the $1 range. Like that's no questions asked. But if it was a company like Tilray that went from 35 to 70 in one day, with nothing going on, I would just say, yeah, I'm out. So my rule is always take some profits, lock them in. That's how I do it. I'm just taking the money. Like, I'm the guy that would be on Who Wants to Be a Millionaire. It's like, you could walk away right now with 500 grand, or you could lose it all. What do you want? Give me the 500 grand. I'm out.
They don't have to, it could be $10,000. Bye.
I'll be out after the first question I get right. They'll be like, all right, Jimmy, you can continue, or you can walk away with $100 right now. I'm like, let's do it. $100. We're out. No, but I look at.
They're not gonna air your show. You know, no excitement. They can be like, yo, we can't even air this guy. He stopped at the first question.
We're on TikTok. Oh, on Who Wants to Be a Millionaire? Yeah. My thing is always.
Are you sure?
Yeah.
Like, was more.
Is that your final answer? But yeah, it would be. Can you ask them what company it is?
Earl, I don't know if he's still watching. Doesn't let me know. What company are you looking at?
Cause shit, 300% return. Let's jump on the bandwagon. To the moon.
I don't think he's still watching anymore. All right, I guess we'll stay on it for a few more minutes. See.
I mean, listen, what I do like is Webull, man. I love Webull. Just logging on in the morning, it'll show you like what the pre-market runners are for the day and like what's doing really well. And sometimes like there's some stocks that'll be up 200% pre-market. And I'll be like, all right, let's go look at the news. Let's see why this happened. And if it's really, really good news, maybe I might jump on and then just get off in 5 minutes.
Do you see it?
OGCN. Oh, Ocugen. Why do I feel like I have that?
You have 64 companies. I'm pretty sure you have most of the stock market.
What was that one just at like $18? Hold on. OCGN.
TikTok, let me know if you guys have any questions. We are still live, even though we were supposed to be ending. You guys had more questions, so we're trying to deliver to the people.
So damn, he got in this really early. Like really, really early. He's got to have this from like $2. Now he's got me curious if I have it or not. Hang on, I'll tell you right now.
Now, what do you think? Do you think he should hold it or should he get out?
I'll tell you, if I have it, I would hold it because I'm not getting out of it. I can't remember if it's OCGN I have or if it's OCY or see, that's the only problem about having so many companies is sometimes you forget what they are.
I can name all my companies because, I only have 10, 11,
No, yeah, listen, I used to do that. My rule was I would only play 9. And if I wanted to go into something else, I would just sell that. But then that didn't happen. And I just
kept buying it all. You're like Pokemon. Gotta catch them all. I know I'm not the only one who used to watch Pokemon.
Yeah, no, I watch Pokemon all the time.
Do you have the company?
That's what I'm looking at right now. I'm looking if I ever bought it or sold it. No, I don't have it. But my sister trades this one.
So what's your recommendation?
I don't know, man. These are companies that a lot of people have run up a lot. Anything that has to do with medical and stuff, which I believe that's what Ocugen is. As long as you see a good, strong few, like there's.
So do this 2 things. Would you sell part of it and make some money and keep the rest in it, or would you put a stop loss to make sure that he still walks away with a decent profit?
Look, I looked at the chart. It seems to have found a base over the last few days, and the fact that it didn't really overcorrect yesterday, it looks like it had its first big pop, and then it had a cool off, like everything else. And then eventually there will be a second pop when it gets attention again. So it already got its attention, and now it's settling, right? As long as whatever product it is they're making is going to stand the test of time, then I would hold it for sure, especially if you're up 300%. But I would come up with an exit strategy. So at what percentage up do you say, I'm out? So if that's 275%, well then, hey, if it drops another 20, 30 cents, get out. You know what I mean? Plus it's also the other question I would ask myself is how much money am I making on this 300%? If I'm making a lot of money and it can make my life better if I cash out, I'm probably going to cash out 50%. But knowing my strategy, I'm selling and I'm waiting for it to drop again. The only problem is if it doesn't drop, you're going to regret it and you're going to chase it on its way up and eventually it's going to correct and it's going to bite you. So either A, hold it, leave it, or B, take some of your profits out and hope that it dips to buy even more later on. That would be my strategy with that. But 300%, again, depending on how much money you put in, man, that could be big profits right there. That could be a lot of money.
This will be our last question, guys, because I'm getting hungry. I need to eat. I'm not gonna hold you. I'm looking at the time like, dang, the restaurant's starting to close yet. Any information regarding NACA?
I had one buyer that used NACA. They started in January and they were supposed to get their approval. It extended all the way until May. And then finally they said, screw this, we're not doing it. And they walked away from the program. It was one of those things that just, you have to keep jumping through hoops, and they were tired of doing it for 6 months and they stopped. My recommendation is if you can buy a house without using these programs, then that's great. I would treat these as just a bonus.
Yes. It's
it's
something that I know personally it takes a while to get. There's no such thing as free money. As Jimmy said before, if it's free, it's always a catch shirt. All right, guys. Thank you.
I say no more questions. You have to go eat dinner.
I have to go eat. I'm hungry. Thank you guys for everything. Thank you, YouTube, for subscribing. We hit 1,000 followers or subscribers, whatever you want to call it.
Guys, help me out, man. I'm at 97. I'm at 97. I'm almost to 100.
I'm gonna get you to that 100. Jimmy's gonna get to 100 by tomorrow, right?
I just need 3 more, and we're gonna be at 100, baby.
What's your YouTube?
Sigma Real Estate Studios. SIGMA Real Estate Studios.
We're gonna get you 100 by tomorrow. Don't worry.
Good.
3 people from this are gonna go follow you. All right. We got over 1,000 subscribers, so it's definitely getting some views. So somebody will see it and say, "Hey, let me check this guy out. He's a little funny. He makes videos."
I try to entertain, but before we go down more rabbit holes and tangents, why don't you get out of here, because I could talk all night.
Yeah. So I like that one. All right, ended it on that. Jimmy, it's been a pleasure, like always.
Absolutely.